Hello everyone, this is a very interesting move on the market. In today's video, we're going to take a look at what the next steps are for the S&P 500, the NASDAQ, the Russell, the dollar, the bonds, the VIX. Overall, I don't think that there's a lot more room to the upside on this move, but we're going to pragmatically look at everything as a whole and then look at making the best decisions moving forward. All right, so without further ado, let's get started with the video. Okay, so very clearly we can see that the NASDAQ was the biggest winner today, right? It was obviously the only green index. All right, so what I want to do is I want to look at the large tech stocks, the big movers, to dissect and zoom in onto the NASDAQ to see how much room there is to the upside, what the next steps are. All right, so let's first take a look at Apple. Apple is pragmatically, right, it's breaking above that level of resistance here, and it's looking to fill this gap down at 190.69. So we broke above here, and now it has a gap to fill to the upside at 190.69. But what is going on in the short term on Apple? We can see that it is trading outside of the upper level of the Bollinger Band. This is relevant because when these large trillion-dollar companies are trading outside of the upper or the lower level of the Bollinger Band, there always tends to be a retracement back into the mean. So the Bollinger Bands basically calculate a standard deviation away from the mean. And the mean is this 20 exponential moving average. So this shows one standard deviation away from the 20 exponential moving average, when it's two standard deviations away from the 20 exponential moving average to the upside and the downside. When it's trading outside of that standard deviation, guys, basically it just means that we need to get a retracement back. This is showing that Apple is very overextended to the upside. When things are overextended to the upside, there generally is not as much room to go to the upside. So we're seeing Apple starting to get a little bit overextended. That means that there isn't as much room to go for the overall market. Okay, in my opinion, based off of this. Next, let's take a look at Google. Google, similar situation. Google is also trading well outside of the upper level of the Bollinger Band. Same exact concept. So Apple and Google are both skyrocketing outside of the upper B bands. The other stocks that I'm going to show, they are all showing bullish structures. So basically Netflix, bull flag, but it's showing resistance basically at a major level of resistance. Meta, same concept, same sort of setup. Amazon, big buying volume on Amazon. So Amazon looks strong. But Tesla also has a bull flag at this major level of resistance. And Microsoft, same concept. Nvidia basically regained almost all of its gains back up to almost $500 already. And AMD, same sort of setup. So what we're seeing pragmatically is the NASDAQ stocks are showing a lot of strength. And they are bull flagging, but they are bull flagging at levels of resistance. So it is difficult to start going long on these stocks when, number one, they are very overextended to the upside. It's very risky to be an Apple bull at the moment. It doesn't, like, just going long here makes as much sense as going short over here on this setup at, August 7th. When we already have a huge move to the downside, it doesn't make sense to go short. Similar concept, it doesn't make sense to go long on Apple. Google, it doesn't make sense to go long on Google. Period. Point blank, it does not make sense to go long on either of these stocks. So because that's the concept, it's difficult to go long on the NASDAQ. And that is my thought process there. Okay. So obviously the NASDAQ is not overextended outside the upper B bands, but now the MACD indicator is pointing upwards. And I'm not going to lie, obviously in terms of the indices and everything, this is a very, very strong move. We've seen a lot of strength on the daily charts out of these stocks. But intraday, so this is a chart of the SPY. Once again, you know, as long as we remain above 447, this can continue going up, but it's difficult to go long at these levels. It's not safe to go long. And that's why all day, you know, while we were streaming, I was streaming for about an hour, and I was just saying, you know, like, honestly, there were a lot of good shorting opportunities. And lo and behold, as soon as I get off, the market starts to tumble. This was the high of the day when we basically got off of stream. We saw really, really terrible price action in the morning. But I was saying that I was saying this should just continue to fall. And yeah, even as I was getting off the last few seconds, I was saying this was still a really good opportunity to go short with 452.80 as a stop loss. 452.80 was a great level of resistance. And we ended up, you know, if you ended up going short, this fell all the way down to like 450. So clearly, it was good. But then we bounced, and then we bounced around a bit, and then we ended up closing right at 450. So now basically I'm gonna continue to, so before we go into that, right, the reason why I was more bearish today, right, three reasons. Number one, Apple, Google were both very overextended to the upside. I didn't see as much room to go in the tech stocks. The main other reason was the dollar. So now we're going to take a look at the dollar. The dollar is green. Okay, so the dollar was green today. It had this big green candle while the market was also at around 452.80. This candle did not change. The dollar was rising as the SPY was also rising. And what do we know when we look at the dollar? This is relevant because the dollar it's supposed to have an inverse relationship to the market. So if the dollar is rising and it's doing well, that means that the stock market should be falling. And the fact that the stock market was still holding and continuing to move upwards, I knew that that was a very bearish move. It was a very bearish setup, and it was a bull trap. And that's exactly what it was. So now, right? We have important GDP news coming out at 8:30 a.m. So that is going to obviously cause, you know, a big move in the pre-market. That's without saying. Number two, Labor Day is on Monday, so we're going to have a long weekend. So taking inventory of the situation, the NASDAQ, the large tech stocks, are at major levels of resistance, or they're very overextended. Tesla is at 263, but it's bull flagging at that level right below 260. Apple is very overextended. Google is very overextended. The SPY and basically the dollar is bouncing. Okay, so look, the dollar is bouncing. The SPY should basically fall. And also we're at a major level of resistance on the SPY at 453. Okay, 452.80 was that level of resistance. Held that perfectly and it fell. Now we need to see if they can continue to drop it. But these guys have been holding this up. So, but overall, tomorrow, heading into tomorrow, depending on GDP news, if we open flat, so say for example, if we open flat, I would still be leaning short. And then as we get closer to 447, 448 level, that's when the market really needs to make a decision. So it's tough to just talk about hypotheticals, because once the GDP news comes out, there can be a big move in either direction. But currently we're still holding on to DI, the Dow basically puts, and the market needs to hold 447. The SPY, to maintain this uptrend, it needs to hold 447. But this is not this is not a setup where you want to go long. I hope you guys can see that this is basically rising just into the sky. You don't go long on these sort of setups, and you wait for pullbacks. But if the pullback drops below 447, then this upward momentum is going to cease, in my opinion. And then main level below 447, then there's 443. The main one is 435. That's a long way to go, but below 435 we could easily see 420. But in the immediate term, heading into tomorrow, 447 is going to be a major level of support. And then of course 443 is a major level of resistance on the SPY. I am currently short on the Dow, and basically we're still holding these swings from Tuesday. And yeah, we saw a big reversal today. Hopefully this continues. That'd be nice. We're holding on to 347 puts, and we're also holding on to GME calls for January. So let's see GME go to 25. That would be great. They have earnings on September 6th. That'd be spectacular if GME opens up at 25. There hasn't really been a lot of hype for GME. They're like usually if like a lot of people start buying it, you know, I haven't really seen many people post that they're buying anything from GameStop online. Like there's no like sentiment where people are spending money on the company. So I'm not sure if earnings are going to do well, but nonetheless, let's see see how that goes. We're holding on to some calls for January, so it is what it is. But yeah, so the IWM is also very similar to the Dow. So the IWM held 188 all day, but it failed at 190. So let's see. The SPY, the NASDAQ, and the IWM are all at major levels of resistance. The large tech stocks are either extended or also at major levels of resistance, and the dollar is bouncing. So let's see how they want to close this into Labor Day. Overall, it's going to be fun. Every day, regardless. Honestly, every day, regardless, when we trade and everything, it's great. So, yeah, when the market doesn't give as clear indications of what to do, then we focus more on day trading, and or we just don't force trades. That's the number one thing. Never feel an inclination to force any trades. That's just a recipe for disaster. Yeah, and with that being said, I hope you guys have a wonderful rest of your day. Make sure to get some rest. Yeah, spend time with your loved ones, and yeah, have a good one. All right, love you guys. Take care. Make sure to like, comment, subscribe, do all that good stuff. Appreciate all of your love and support. And I truly, oh my god, I really hope that the mic has been working. I guess we'll see. All right, love you guys. Take care. Have a good one.